So come on, we are doing May June 21, paper 32, question number 6. When I am reading the question, the first thing that I can see over here in my question paper is what? Prepare what? What is the first thing that I can see?
Prepare
Prepare
a realization.
realization account. Can you tell me the concept of realization account?
It is used to calculate the change in ownership
Yeah,
of assets.
but how do you prepare a realization account?
Assets would be debited. Assets taken over would be debited.
All assets taken over or not taken over, everything will be debited. At what value?
Net book value.
Then
All liabilities would be credited.
at what value?
Book value.
Everyone can participate, please. Purchase consideration will be credited. If the partner is taking over any asset, then that asset would also, it's over here, so the partner is taking over. So you'll write the partner's capital account. If the liability is being taken over by the partner, you will write partner's capital account. If you are paying, then you will write bank. You will get either the profit on realization or you will get the loss on realization. Yes?
Yes, miss.
When do you make a realization account? When the old firm is dissolving. Okay, when an old firm is dissolving, that means it is completely going to get wiped off. At that time, you prepare a realization account. Can you tell me when do you prepare a revaluation account?
It can be prepared anytime. Like
It can be prepared anytime when you are admitting a partner or a partner is retiring or there is death or there is change in the profit sharing ratio. At that time, you can prepare a revaluation account. What is the format of revaluation account? All the good things will happen on the credit side, all the bad things will happen on the debit side. What are the good things that can happen?
increase in
Assets.
Asset value go up, asset value go down, bad thing. What is the good thing in the liabilities? Liabilities go down and liabilities go up. Are you with me?
Yes.
Okay. So let's recall. When do you prepare a realization account? I'm actually waiting for an answer.
During takeovers or dissolution of the
When
company.
the old firm completely wipes off, when the old firm dissolves, you prepare realization account. Okay? Old is going and new is coming. Yes?
Yes, miss.
Yeah.
When do you prepare a revaluation account?
It can be prepared anytime.
It can be prepared anytime. So here only the good and bad is happening. And over here, old completely goes away and new is formed. Are you all with me? You all know the format also of making the realization account. The purpose of doing this and asking you all to do it again and again is that you should know how to prepare it. Our first question is prepare a realization account. Come on, let's start.
Miss,
Yeah, tell me.
revaluation account won't be prepared when there's like a dissolution, right?
When there is an acquisition and dissolution, you do not prepare revaluation account.
It's only during merger, right?
It's only during merger you prepare revaluation account. Okay. Come on, let's see. Our first thing is you have to prepare a realization account. So I read the question and it is just to keep in mind what information I would need. Okay. Come on, Upinder, please read the question. Is she there?
Yeah.
Yeah, read.
Alan and Brian were in partnership, sharing profits and losses in the ratio of 3:1, 3:2. The statement of financial position of the partnership at 31st December 22 was as follows. Z Limited acquired this partnership because
Okay,
of
fine.
first.
I have to prepare a realization account.
Yeah.
When I prepare realization account, do I know that I write all assets on the debit side
Yes.
at the book value? So can I write all the assets on the debit side at the book value? I will leave cash and bank because normally it stands at an exception. Can I write all the assets on the debit side?
Yes.
Start writing. Is it done?
Yes.
Yes.
Okay. I have written all the assets at book value. I have written all the liabilities at book value. I have my capital account balance and current account balance. Your NATO is always equal to your capital. I hope you remember this. Your net assets taken over is basically your capital account balance and the current account balance. You should know that net assets is equal to capital. Just keep that in mind. Come on, let's go ahead. Upinder, please continue reading.
Okay. Z Limited acquired this partnership business on 1st Jan 2021. Most of the assets and liabilities of the partnership business were taken over by Z Limited. The agreed terms of the acquisition were property and equipment were valued at 350,000 and 68,000 respectively.
Okay, 1 minute. If they are giving us valuation of the property and equipment, are they trying to give us information about the NATO? Are they trying to give information about the NATO? The net assets taken over?
Yeah.
Yeah. So because I know there is information this is information regarding the NATO, I will not do hard work. I will go and see whether I have to calculate goodwill or the net assets taken over. I will go and read the question. Read the question. Statement showing final settlement and goodwill. They're giving us goodwill also. Okay, we have to calculate the goodwill that is arising from the partnership. So this will help us to find NATO. So I'm writing NATO. Are you with me?
Yes, miss.
Okay, fine. Read ahead.
One motor vehicle was valued at $29,000. Another motor
This is
vehicle
also
was,
NATO.
yeah.
Yeah.
Another motor vehicle would be taken over by Allen at the value of 28,000.
Okay, stop. Will this come in the realization account, the other motor vehicle which is taken over by partner?
Yes.
Yes. So there is one motor vehicle that is taken over by Alan. So what will I write? Alan capital account. That is motor vehicle. At how much?
28,000.
28,000. Okay. Tell me the next part.
Inventory would be taken over at value of $20,000.
This is NATO realization account. If it is taken over by the firm, then it will be NATO. Okay, and I just write the purchase consideration of whatever I'm taking over. If it is taken over by partners, then I write the partners capital account. Are you with me?
Yes, miss.
Okay, come on, read ahead.
Trade receivables of 4,400 were considered irrecoverable. The remaining trade receivables would pay 30,500 to the partnership in full settlement of their accounts.
Okay, come on. Can somebody explain me this adjustment? Is it a part of NATO or is it paid by the partnership firm? Or I mean it is received by the partnership firm. So is it a part of NATO or is it a part of realization? First question.
Realization.
Realization.
Why realization?
Because the partnership is going to receive it.
Discount.
Discount.
Miss, it's both NATO and
Okay,
realization, right?
understand. Okay, understand. If it is taken over by the new company, then it will go with the new company and the new company will receive the money from trade receivables. How many of you all agree?
Yeah.
If it is taken over by the company, then the new company will receive the money. Yes? So we say assets over here. If whatever is taken over here, I record purchase consideration in one figure for the taken over value. But if it is not taken over by the company, then either I can receive some cash or the partner can take over. Yes?
Yeah.
So what are they telling us over here? What are they telling us over here?
That is not taken over.
The trade receivables will pay 30,500 to the partnership. That means the money has been received by the partnership. It is not going to be received by the company. It's not going to be taken over by the company. Correct?
Yes, miss.
Okay. So for what is the amount of trade receivables that I have? 36,000? Yes. Out
Yes,
of
miss.
which 4,400 is what? Bad debts?
Yes.
Okay. So what is the remaining trade receivables that I have?
31,600.
6,000 minus 4,400. 31,600. And this 31,600 is what? Yeah, tell me.
And then 1,100 is the discount.
Discount.
Yeah, because 31,600 is there, and then they've paid 3,500 now, so the remaining should be that, I think.
So can I say that the trade receivables are going to just pay me how much? Cash bank. How much are they going to pay me?
30,500.
30,500, and I will just record that much. All assets on the debit, all liabilities on the credit. If the asset is taken over by the partner, then partner's capital account, and whatever money I receive, I will record it. the simple format of realization account. And what will I write? This I have received from my trade receivable. Are you with me? Are you all with me?
Yes.
Yes, miss.
Okay, fine. Read ahead. Upinder,
Yeah. Um, Z Limited would not take over the bank balance of the partnership.
so now I am clear this bank balance is not taken over. Yeah?
The partnership would pay 14,400 in full settlement of trade payables of 15,000. The remaining trade payables would be taken over by Z Limited at their book value.
Okay, fine. What is the amount of trade payables? First, tell me it is a part of NATO or realization.
Realization.
It is a part of realization because the new company is not taking over. It is everything that is happening. Money is being paid by the partnership and partner is taking over. So what is the amount of trade payables?
33,000.
33,000. So to settle 15,000, we are paying how much?
14,400.
14,400. So I am going to pay 14,400.
Mm-hmm.
So should I write cash bank?
Yeah.
Because the trade payables is here, I'm going to pay her.
So
Yes.
600.
So I'm going to pay 14,400. I do not record discount allowed and discount received. We just write, this is here, I paid here. This is here, I received here. That's it. Are you all with me?
Yes, miss.
Okay, fine. So for 33,000 to settle 15,000, I am going to pay 14,400. What is the balance amount? What is the balance amount?
600.
600. From 33, 15,000
Oh.
is settled. From
18,000.
18,000.
so the balance amount is 18,000. Who is taking over the balance amount?
I'll be in the taken over by Z Limited at their book value.
So the balance amount
That'll be NATO, right?
this that is taken over by Z Limited, 18,000 will be NATO. Yes?
Yes.
If you have any doubts, please tell me. 33,000 is the trade payables. 15,000 to settle 15,000, I am paying 14,400. Correct? Correct?
Yes.
And the balance of this 18,000 is going to be taken over by Z Limited. So this 18,000 will become a part of NATO. Are you with me?
Yes, miss.
Okay, come on, let's go ahead. Open there.
Yes, miss. The purchase consideration. Just give me 1 second.
Arich, continue reading.
The purchase consideration for the partnership business was 500,000 and would be settled by Z Limited as
This
follows.
is discharge of purchase consideration. This I will look later. Come on. Purchase consideration, which side should I record?
Credit side.
Credit.
Credit side. What will I write? I will write Z Limited. This is the purchase consideration. How much is the purchase consideration? 500,000. Are you with me? Are you all with me?
Yes,
Yeah.
miss.
Okay, fine. Now what do I have to find out? I have read the full question, discharge of purchase consideration, everything that was related to realization I recorded. All assets here, all liabilities here. If the asset I have received money If I have paid the money to the trade payables here, if I have received or partner has taken over the assets, it's here. Purchase consideration is here. Find out the profit or loss on realization. Which side is more?
Debit side is more.
I think the credit is more.
Yeah.
500,000 plus 30, 500 plus 28,000 plus 33,000. 591, 500.
Miss, I got the debit side more.
How? Let's see the debit total. 300.
No, sorry. Credit only is more. The balance I got is 84,100.
Okay, just let me see.
Miss, I'm still getting debit side.
How?
I'm getting profit on realization.
Yeah, so profit on realization. So you will get profit only if your credit is more.
Yeah.
Oh, okay,
16
okay.
and
Okay,
one.
I thought you asked which side you record. Okay, sorry.
So what is the profit on realization?
84,100.
Alan and Brian, it will be 84,100 and it will be split in the ratio of 3/5 and 2/5.
50,460 for Alan. Yeah.
33,640 for Brian. Yes. Are you all with me?
Yeah, miss.
Yes.
Is it done? Is it done?
Yes, miss.
Can you all send me an image?
Yes, miss. 1 minute.
So our next question is, what is the difference between a realization account and revaluation account? Can you all tell me what is the difference between realization and revaluation?
The ownership assets is changed in realization,
In
but
realization, ownership of asset is changing. What does this mean?
that the ownership is going to someone else.
Ownership is going to someone else. What is the other meaning of this? The old firm is dissolving and it is going away. Old firm is completely dissolving. Okay. What happens in revaluation? I'm waiting for an answer. If you
It's
don't
not.
answer, I think you all don't understand.
No, I will answer, miss. I'm your star student. The ownership and revaluation is not changed. Only the asset is revalued or
Only the
liability.
assets and liabilities are revalued. Okay. This is one distinguish. In realization, ownership completely changes. In revaluation, it does not. What else? When do you prepare realization account?
For dissolution or any takeover.
So you prepare realization for dissolution or takeover. When do you prepare revaluation account? When do you prepare revaluation account?
Like when a partner joins the partnership.
When there is a change in the partnership, change in the business, admission, retirement, death. Okay. Realization is prepared only at the time of the dissolution, sale, acquisition. But revaluation can be prepared any number of times. It is for 6 months, right?
It shows 2 marks.
Okay, 2 marks. So you can do any 2 points. In realization account, you take your net book value of the assets, but in revaluation, you only take the good and the bad, the increase or a decrease in the value of the assets. I'm waiting for you all. Write it. Okay, tell me, when there is acquisition of the partnership firm, what basically happens? Which are the accounts that you prepare? When there is acquisition of the firm, what are the accounts that you prepare?
Realization, partners capital,
You
current
prepare
account.
realization account for what? What is the reason to prepare realization account? What is the reason to prepare realization account?
Because the ownership of assets has changed.
So that you know your profit or loss on sale. You know your profit or loss on realization, you know the profit or loss on sale, right? Where do you transfer this profit or loss on the sale of assets or the acquisition of the assets? Where do you transfer it?
Partners capital account.
Partners capital account. If you have any current account balance, where do you transfer it? If you have any current account balance, where do you transfer it?
Capital account.
Partners capital account. And will the partners capital account have any balance closed down?
No.
No,
No,
the
it would be
partners capital account will not have any balance closed down. What do we do?
it will be the bank.
Bank will be the balancing figure.
So there will be a final settlement that would happen through bank. This is the normal process. Find out the profit or loss on realization. Transfer it to the partner's capital account. Close the current account. Transfer it to the partner's capital account, and you will have the final settlement to be done through bank. Am I correct? Am I correct?
Yes, miss.
Okay, fine.
Yes.
So you all agree to me that I know this much. Okay. Now over here they are telling me prepare a statement to show final settlement to or from each partner. So can you tell me actually what are they asking me to prepare?
Partners capital.
They are asking me to prepare a partner's capital account. Very good, Arij. But can you look over here? What are they telling me? Prepare a statement. That means they want us to prepare partners capital account, but they do not want it in the T form. Which form do they want it in? They want it in
Vertical.
the statement form. So if they want it in the statement form, I will write it in the statement form, but I should be clear what should be added, what should be subtracted. So anything that will come on the credit side of partners capital account, I will add it. And anything that has to come on the debit side of partners capital account, what will I do? I will subtract it. Are you with me?
Yes, miss.
Yeah.
Okay, this is one thing. Second thing, do you remember the format of partners capital account?
Yeah.
Tell me. In acquisition, I'm talking. Capital account format in acquisition.
Yeah, so balance BD on the credit side, then your profit on realization, then your additional vehicle. Let's see.
Assets taken over.
So yeah, and
Loss on realization will be a purchase consideration will be a
your ordinary share capital,
ordinary share capital, debentures or
your cash, and your
So,
share premium.
yeah, whatever consideration, Sidra, your mic. Whatever is your purchase consideration would be on the debit side, and your final settlement will happen through. How will it happen?
With bank.
Through bank. So I'm writing Alan and Brian. Are you all with me? Are you with
Yes.
me? Okay, fine.
Yes, miss.
So I am just copying the realization account that I have made so that I know that if I have to take something from the realization account. I will start with what?
Capital balance.
I will start with the capital balance. So anything on the credit side will be added, anything on the debit will be subtracted. Are you with me?
Yes, miss.
Okay, so I'm starting with the capital account balance. What is the capital account balance for Alan?
250 Alan, 200 Brian.
Right. After capital account balance, what do I have?
Current account. 27 Alan.
Positive current account, and Brian has a debit in the current account. Yes? Then I'm just scrolling through this 1, 2, 3, 4, 5. This cash or bank is paid by the partnership, so partner's capital account is not there. Then I'm seeing this profit on realization. Which side will it be? On the credit side, right? So this will also be added. What is the profit on realization? Are you with me?
6,460 and 33,000.
640, correct. Come on. This is realization credit. Realization credit, so capital account, debit. Are you with me?
Yes, miss.
So this is motor vehicle that is taken over. So this is more motor vehicle taken over by whom? Alan. Because it will come in partner's capital account debit, so I'm putting it in bracket. Now this is the purchase consideration. All the purchase consideration would come on the debit side. Are you with me?
Yes, miss.
So come on, I will write all the purchase consideration. What is purchase consideration? Tell me.
23,000 is cash.
Cash I will not take into consideration because final settlement happens in cash. That I never write.
Okay, okay. And then there's ordinary shares at premium.
Okay, so what is the total amount of purchase consideration? 500,000.
Yeah.
Out of which 23,000 was cash, but I want the balancing figure. So what is the balancing figure? 500,000.
477.
477,000. 477,000 I am issuing shares. And the price per share would be 1.25. Yeah?
Yeah.
What is the number of shares that I'm going to issue? What is the number of shares that I'm going to issue?
381,600.
381,600 shares I am going to issue. Okay. And this is distributed to the partners in proportion to their capital account. So 381,600 is distributed to the partners in proportion to their capital account. So in proportion to the capital account, so I see it is in the ratio of 250 is to 200. So 5, it will be distributed in the ratio of 5 is to 4. Are you with me?
Yes, miss.
Okay. It is distributed in the ratio of 5 is to 4. So this is 381,600 shares into 1.25. So it is 477,000. And 477,000 is going to be distributed in the ratio of 5 is to 4. So 265,000 for Alan and 212,000 for Brian. Are you with me?
Yes, miss.
So the balance would be from bank. I will write final settlement through bank. Give me the answer. Is there anything else that has to be coming in the partner's capital account?
No.
Give me. For Alan, what is the final settlement amount? What is the final settlement amount for Alan?
5644. Oh.
Wait, I will
Yeah.
go again.
No, I think I will do again. Oh no, Upinder, yours is correct. Mine is wrong.
What is it?
34,460.
Yeah.
And for Brian?
13,600.
14,640.
Very good. Both is positive amount?
Yeah.
Both is positive amount. That means it will be on the partner's capital account. Which side?
Credit.
Credit side. So bank is what?
Debited.
Bank debited. So it is final settlement to the partners or from the partners?
To the partners.
Partner will be giving, right? That is why it will come in the bank account.
Yeah, to the partnership.
So it is from the partners. Partners will pay from the bank account. Because it will come in our bank account. Bank debit. If you have confusion, do not write payable or receivable, write final settlement. Okay?
Okay, miss.
Can I go ahead?
Yes,
They
miss.
want us to calculate the value of goodwill. They want us to calculate the value of goodwill. How do you find goodwill?
NATO purchase consideration. You subtract from NATO.
NATO is compared with purchase consideration. Come on, so we will find NATO. We have already marked NATO. When we were doing the question, we had already marked NATO. So first was the property and equipment that is taken over. Property, and then there was equipment.
Then motor vehicle 29,000.
Then motor vehicle was 29,000.
Inventory 20,000.
Inventory 20,000.
And 18,000 of trade payables.
And trade payables 18,000 that you will subtract. You will get your NATO, net assets taken over. What is the amount?
467.
No. What is the amount?
Sorry, 449.
This is compared with the purchase consideration.
$51,000.
So you will get the goodwill. Are you with me?
Yes, miss.
Are you all done with this?
Yes.
Let's go
No,
ahead.
but I'm not done with this. 1 minute, I'm not done.
Then why did you
I
say
just-
yes?
It was automatic response.
Takeover and merger.
Come on. Before acquiring the partnership business, can someone please read? It's the same sum, right? Yeah. Can someone please read? Read, Arij.
Before acquiring the partnership business, Z Limited had 2 equal shareholders and a total share capital of 1 million. These
Can you please
shareholders,
explain what are they trying to tell you?
that the share capital was 1 million.
Okay. And after acquisition, it will become how much?
Mm,
How many shares have they issued?
4.
mhm.
357,600 shares, right? How many shares have they issued?
381,600.
So they have issued 381,600 shares. Okay, so before acquisition it was 100 million. Now it will be 381,600. That is 1,381,600. Okay, go ahead. Read, please.
A few months after acquiring the partnership business, Z Limited decided to acquire the business of a sole trader. The agreed consideration would be 800,000. The sole trader requested the consideration should be settled by 640,000 ordinary shares and a directorship in Z Limited.
Okay. What advice do they want?
Whether or not they should accept the request of sole trader.
Okay. Tell me, what will happen if they accept the request of the sole trader? First, Z Limited had how many shares?
Million.
1 million shares. Then afterwards, that means they had 100% ownership, right?
Yeah.
After this, they issued shares to a alien. What was the name?
Allen and Brown.
So they issued shares of 381,600. So the proportion of Z Limited became, after they issued the share, the proportion of Z Limited, their total capital, they had 1 million in the total share capital of 600, in the total share capital of 1,381,600. So what would be the proportion? Divided by 1,381,600.
72.38%.
So the shareholdership proportion reduced from 100 to 72.35%. Now, if they accept it, okay, if they accept the proposal of Z Limited, so their proportion would become how much? It would be 1 million over 1,381,600 plus how many ordinary shares they are giving? 640,000, right? So it will become how much percentage? 49.47%. If they are accepting the proposal of the sole trader, from 100 they had already had their ownership in the company to 72.38% when they acquired the partnership. Now, if they acquire the sole trading concern, their stake in the ownership would further reduce to 49.47%. So, what is it for and what would it be against? Come on, I need 2 points for and 2 points against.
Alan and Brian will bring their own skill sets, expertise.
No. Now here we are talking about they've already acquired the partnership. Now they want to acquire a sole trading concern. If they acquire the sole trading concern, the sole trader is telling me you give me consideration with 6,400 shares.
Miss, there will be dilution of ownership.
So there will be dilution of ownership. Dilution will be there. But if the proportion is going below 50%, they will lose the controlling power. The original shareholders will lose control power because their portion in the total share capital is falling below 50% if they accept the proposal. If they accept the proposal of this sole trader, they will lose control over the business because their percentage in the total capital is below 50%. Yes,
Mm-hmm.
the sole trader is also asking for directorship.
So they lose control and
There may be conflict with the new director.
okay.
So the sole trader is asking 640,000 shares and he is asking to be a director. So if they agree for it, one is they will lose their control, and the second thing is they might end up into conflict with the director. Yes?
Mm-hmm.
Okay. Go ahead. What is the point in favor of acquiring the sole trader? They
I
are
don't
going
know.
to pay purchase consideration by issue of shares. A huge chunk is paid by giving new shares, so they are saved from paying cash. Yes?
Okay, so 2 marks for the calculations, 2 for pros and cons, and 1 for
There is,
advice.
you have to show the calculation because only based on this calculation you're getting something against acquiring. Otherwise, there
Okay.
is nothing against acquiring except for conflicts. And
Okay.
once you show this calculation, they will not enter into anything else that you write. Okay? So this is your calculation for acquiring the sole trader. You are paying a huge chunk by shares, so you're saving cash, and the synergy effect leads to profitability in the future. Sole trader has his own experience and expertise. Against, you can write there may be conflict with the director, they will lose control, they will lose the decision making power. Okay, what is your
Miss,
advice?
shareholding is a type of ratio or something?
Shareholding is like basically if you have more than 50% of the shares of a company, you are the one who is the okay. So what is happening is that initially Z Limited had 100% stake. Then they increased capital by 381,600 when they acquired the partnership. So the stake reduced. Now if they further acquire the sole trader and give him 640,000 shares, they will lose the entire control. Otherwise, the basic answers that you will write, you will get only 2 marks. Even if you write 2 for and 2 against. Are you all with me? Now come on, I
Yes.
want advice from you all. Advise the directors whether or not they should accept the request. Advise.
They should accept
Why?
Yeah, accept.
because
To lose control.
no, but who they won't lose. It's a long-term expansion strategy, so it will
If
bring
you're
in
losing
profit.
control over the business and you're giving the directorship to the sole trader, that means you're cutting your hands and you're giving it to him.
Okay,
They
then.
But in
they can acquire the sole trader, but they should not issue so many shares that they lose control. Clear answer. No
okay,
business.
Miss, if I skip calculation and I just write decision making
Three
and
of three and a half you will get.
okay, even
Okay.
with the advice.
Yeah. Now with this, we complete May June 21 paper 32.